Hey, good morning, everyone, and welcome to today's session, a small business lending panel put on by the SBA and CVOEO. My name is Rachel Goldstein, and I am the director of the Financial Futures program at CVOEO. And this morning, I am representing our micro business program, which offers one-on-one coaching and counseling to Vermonters interested in starting small businesses, as well as in growing small businesses. And we also put on wonderful events like this morning's session. So we're very pleased to have you. Before we go further, I want to take a moment to thank our representatives who are joining us from the Brattleboro Development Credit Corporation, Community Capital of Vermont, Opportunities Credit Union, Vermont Community Loan Fund, Vermont Economic Development Authority, and the U.S. Small Business Administration. So I'd like to begin the conversation by inviting each of our panelists to introduce themselves and their organization and tell us a little bit about what you do to support small businesses in Vermont. And I will start with Dan Winslow, who is on my left. So Dan, please unmute yourself. Thank you.
Hello, everyone. Thank you for taking time out of your day here to talk with us. I'm Dan Winslow from Vermont Community Loan Fund. We are a nonprofit community development financial institution based out of Montpelier, Vermont. We lend to small businesses all over the state, however. We focus our lending on a number of areas, but such as food, farm and forest, agriculture, local food. But we also lend for any business, and we have a variety of products that we offer that some are at rates that are a bit higher than a bank because we're an alternative lender, and our role is to try to lend where a bank or another conventional lender might not be able to. Though we do have some subsidized interest rate products, particularly in the areas of any kind of a startup food business or sometimes for early care and learning as well. We lend for any real use of funds, whether it's to buy equipment, working capital, inventory, to buy a building that's going to be used actively in active commercial use. So we're not necessarily doing passive real estate, but we want to support active business growth. We also lend to support a business acquisition. If you were looking to buy a business, that can be something we're looking at, trying to help you out with. We get funding from a variety of sources, including the SBA microloan program, and that allows us to offer business advisory at no cost to you. We have an in-house business advisory team. Many of you, I imagine, are working with some of the other excellent organizations in our state that offer business coaching, such as CVOEO or Vita, SBDC, SCORE, the Center for Women in Enterprise, etc. But we have focus on just trying to deploy capital in areas where maybe a traditional lender cannot. And so we are always looking at launching new products and new programs. Two things I forgot to mention. One is we have a program for COVID relief. And so that is a subsidized interest rate program, 0% for the first 2 years and then 3% thereafter. And the focus of that program is really to help a business pivot, where a great example of what we use that for is like helping you buy a new piece of equipment that reduces your costs or something like that. Or if we just recently are going to close a loan for a restaurant to expand their outdoor dining. So basically helping support a change in strategy is what the focus of that program is. And the other one, which we're in the very nascent stages of, we're still in the single digit for a number of borrowers, is the Justice Forward Fund we have launched. And that is a very targeted program for people who have really been excluded from the traditional financial system. So that program, if you're interested in, you can email us at vclf@vclf.org. But that's really designed for, that has a specific net worth requirement of household, your personal net worth cannot exceed $36,000, because we're trying to target people who have been marginalized and excluded from the existing financial system with that program. So there is a specific requirement there for it. But all that being said, I think I'll let the other panelists go on, but I can talk about that and other parts of our philosophy through the question period.
Thank you, Dan. We'll go to Bobby next.
Thank you, Rachel. Good morning, everyone. Again, I'm Bobby Kilburn. I'm the Director of Financing and Management with Brattleboro Development Credit Corporation. And since that's a mouthful, I will refer to the organization as BDCC. BDCC is one of 12 regional development corporations located throughout the state. We serve primarily the southern part of the state, so Windham and Bennington counties, but some of our products also touch both Windsor and Rutland counties as well. We have multiple business lending products that really help a business move from vision to operation. We work with business startups, those businesses looking to accelerate, business owners looking to put in place succession plans for selling their business, and small businesses looking for general technical assistance or access to capital. We have 3 different revolving loan funds, and this is with support from the SBA. We are a new SBA microloan lender, USDA through their Rural Micro Entrepreneur Loan Program, and we also have a RLF specific to Windham County through the Windham County Economic Development Program. Our loan amounts range from as low as $750 up to a maximum of $90,000. And depending on which loan best meets your needs, loan repayment terms range from 2 to 10 years. None of our loans have any prepayment penalties. They do require a credit elsewhere test, if you will. So in other words, if you need capital and you can qualify with a traditional lender, we encourage you to go that route. As far as interest rates are concerned, ours range from 3 to 8%. They're all fixed rate loans. And depending on where a business is in its business life cycle, goals for the future, need for capital, we do have lower rates that may apply. The added benefit for working with BDCC, regardless of if you take out a loan or not, is we offer direct technical assistance. And that can really take many different forms, such as one-on-one support in areas such as business plan development, assessment of financial statements, connections to partner organizations that can provide some specialized support if we can't do it in-house, or marketing and sales development planning, things like that. We have an on-site business team that also offers workshop and classroom type series. They're currently in the midst of a financial acumen workshop series where they're diving into everything that has to do with financial statements, how to read and analyze your balance sheet and income statement, and how to develop a budget. And then we recently just hosted a lenders roundtable, bringing together all the local lenders in Southern Vermont to make sure that businesses of all types really can access the capital that they need. Our loan products may be used for defined projects such as working capital, debt refinancing, purchase of equipment, real estate acquisition, and even construction projects. We're really excited. In January, we launched a new loan program in addition to the SBA microloan program, and it's a crowdfunding platform similar to a GoFundMe effort. And that was really made possible because of our partnership with LISC, the Local Initiative Support Corporation in Kiva. In this partnership, we're looking to expand opportunities, as we are for all of our programs, for underserved entrepreneurs, including low to moderate income business owners. We serve as a trustee in this capacity. We're the only trustee in the state. So in this case, this program is available statewide. And the nice thing about this is that it offers LISC matches up to incremental loan amounts 1-for-1. So in other words, if you are approved for this type of a loan and you reach your campaign goal of $5,000, it will be matched with an additional $5,000 contribution if endorsed by a LISC trustee, in this case of BDCC. So I'm going to stop there, similar to as Dan mentioned, and happy to answer more questions as we take them one for one.
Thank you, Bobby. We'll move next to Alex.
Hi, good morning. My name is Alex Robb. I run Community Capital of Vermont. We're based in Barre, Vermont. We're a very small micro lender. We're a micro business ourselves. There's 3 of us. We have a really good understanding of what it means to be a small business and the challenges that businesses face, because we work through them every day. We are an SBA lender, a USDA lender, and we have some other funds, but our primary product right now is the SBA microloans. SBA microloans are available up to $50,000. They are supported by the SBA, and one of the things that happened during the most recent economic downturn is that Congress appropriated money in order to help SBA borrowers get through the crisis. And the people in our who had microloans through Community Capital of Vermont were given 11 months payment made for them by the government during the crisis. So I'm just going to give a little bit of a shout out to the SBA for that. And if you are looking at lending and looking at possible loans for your company, I would definitely consider the SBA, because they really stood by their borrowers during the COVID epidemic. And who knows if that happened again, but it's something to think about as you go to different lenders, that maybe, if we do have another crisis or something, the SBA might step in to support you in a moment of when you really need it. We do technical assistance here at our office in Barre. We act as kind of a concierge, where you come in, give us a call, send us an email. We can point you to different resources throughout the state. We have a partnership with the Vermont Small Business Development Center. If you come to us with a business plan that needs help, we can send you along to them to get your business plan worked on. And then once it's done, you can come back to us if you want financing. We also offer credit lines. One thing that a lot of businesses have really needed in the last year that they've had trouble getting is credit lines under $10,000. It's, the nice thing about a credit line is that you have that, you apply for a credit line, you're approved for a certain amount, say $10,000. And then if something happens and you need that money, you're all set to go and you can access the money really quickly. So it's often a challenge for small businesses to find, and especially micro businesses, to find credit lines under $10,000. And if you use it properly, it can be a lot more economical and reasonable than a credit card. So, our number here at Community Capital Vermont is 802-479-0167. And basically, we are interested in hearing from you about your micro business and any needs that you have, and working with you to solve those needs and find someone who can help you bring your business to the next step. So thanks a lot to the SBA for hosting this call today. We appreciate it, and to Rachel from the CVOEO.
Thank you, Alex. And that reminds me that everyone participating today will receive an email at the end of this session with contact information. I also invite our panelists to put that information directly into the chat in case anyone has joined without registering, but we'll circle back to that at the end. I'd like to continue with introductions, and Sandy, I'd invite you to introduce yourself.
Sure. Hi, I'm Sandy Croft. I'm the Deputy Director of Commercial Lending at Vita. Vita stands for Vermont Economic Development Authority, but it's a mouthful, so we'll go with Vita for the rest of the meeting. We're a quasi-state nonprofit. We do lending typically along with a bank to help make a project happen within the state of Vermont. We're in the majority of our loan programs, a subordinate lender, where a bank does a portion and we do a portion, allowing the borrower to put in as little as 10% equity versus the 20 to 25% that might be required on a bank loan.
Sandy, I think I accidentally muted you there. I'm sorry.
You did.
My apologies. Continue.
No worries. There are a lot of people who would like to mute me. Thinking my husband and my brothers. Anyway, I'm not sure exactly where I was where I got muted. So forgive me if I'm duplicating a little bit, but we typically work in conjunction with a bank where we are a subordinate lender to make the project grow. And that can allow for a reduced equity position above what is typically required with a bank on its own. We have a number of loan programs that allow for lending of smaller amounts all the way up to 5 million now. And in some cases, we can go as high as 6 million because we just had a statute change, like I think it was last week, maybe the week before. We also do, we're a CDC in the Vermont 50, or excuse me, the SBA 504 loan program, where if you're looking to buy real estate or large capital equipment, it can allow for a low rate over a 10 to up to 25-year term, depending on which, whether you're doing the equipment or the real estate. And we also do smaller loans up to 250. We can do those on their own with an SBA guarantee, which are the rare occasions where we do loans without a bank. And with that, I will yield the floor to the next person and jump back at it with the questions.
Thank you, Sandy. Laz, we'll come to you.
Yes, good morning. I'm Laz Manrique from Opportunities Credit Union. Thank you, Rachel, and thank you, the SBA, for hosting us. I'm the commercial lender for Opportunities Credit Union. We are a statewide lender with 2 branch locations in Chittenden County, Burlington, and Winooski. Our inception is 1989. And like many of the folks here, we have a unique classification space where we can do lots of conventional lending, but also operate in a space where we're in a CDFI community-based focus. We're a full service credit union where we offer everything from consumer loans to mortgage loans to consumer counseling, credit counseling. We also have a business loan program, which I proudly represent. Work on various projects statewide, everything from the micro lending space, beginning with $1,000, all the way up to comfortably about $750,000 is the space that I represent for the credit union. And that space is everything from asset purchases, equipment, real estate, startup businesses, buying existing businesses, sole proprietor, you name it, all sorts of folks all throughout the communities and with a statewide focus. And also participating with the SBA for their support, wonderful partnership we have with them, Vita, the SBDC, CVOEO, Mercy Connections, SCORE, many of the folks we work with in the community on behalf of the members that we that approach us for business lending or business loans and needs. Most of our interest rates products, everything from our lines of credits to our fixed rate conventional, not everything is in a single digit, meaning there are no double digit rate loans. And we operate in a space where we think we're comfortable. We've been very comfortable. Even during the pandemic, we were lending comfortably, looking for opportunities to do so. Many of the projects I've worked on in the last couple of years has been spiked up in the pro forma or projection-based projects, which often support or garnish participation from other institutions to try to put together. So we really operate in a creative space. All of the 5 C's of credit do apply in what we do. And proudly, the 6 years I've represented the credit union, we have lent to many restaurants, eateries, you name it, throughout the Chittenden County, and especially throughout Franklin, Windsor County, and as far down as Bennington County. So we thank many of the professionals out there in the SBDC that has helped us along the way, building those projections for our members. But overall, I'm proud of what we do, and thank you for having us today.
Thank you, Laz, and thank you all for introducing yourselves and your organizations. Before we move into our prepared questions, I'd like to invite Kevin to introduce himself. Kevin is the co-planner for this event. And Kevin, I'll let you say some more.
Great. Good morning, everyone. I am Kevin Morehouse from the Vermont Small Business Administration District Office, also known as SBA, right? That's a lot easier to say, I think. You know, and SBA has been around since 1953, delivering millions of loans, loan guarantees, contracts, counseling sessions, and other types of assistance to small businesses. And generally, the agency does this through kind of I like to call it the four-pronged approach. You know, the first prong being access to capital, which is, you know, business financing. There's a variety of products that we offer to help, you know, small businesses access capital, all the way from, you know, the smallest of the small through our micro lending programs to up to $5 million. You know, through some of our other guarantee programs. Second prong being entrepreneurial development. You know, we provide free face-to-face counseling, low-cost training through specific organizations, and we generally partner with some of the organizations that you've heard about today: Vermont Small Business Development Center, SCORE, and the Women's Business Center in Vermont. It's known as Center for Women in Enterprise, to help us, you know, provide those types of things, technical assistance, training, whatnot. We also have a government contracting piece. That's kind of the third prong, where we help small businesses access federal contracts. That's something that's typically underutilized in Vermont, but it is something that we do help with. And then finally, kind of the last prong, you know, there's an advocacy group within the Small Business of Administration that's really a voice for small business. That component of the agency was created in 1978 to help congressional legislation on behalf of small businesses. So, you know, certain, you know, regulatory burdens that may come up that impact small businesses. You know, there's folks that work specifically on those things. That's kind of the high level overview of SBA. And really today we're here to talk about, you know, accessing capital and finance for your business. And again, SBA generally is not a direct lender. So all of the organizations that you heard from today are organizations that have partnered with SBA to access the broad spectrum of programs that the agency offers, be it, you know, a direct loan through the microloan program, be it accessing financing from Opportunities Credit Union or Vita, where they access a loan guarantee where the agency provides them, you know, kind of, I like to call it credit insurance for the loan. So there's a variety of things that the agency does to stimulate and entice, you know, that activity to happen so that folks can access capital. The last piece I want to talk about is, and I'll put the link in the chat, but SBA a number of years back recognized that our website gets a lot of hits from people searching for financing for their business. So the agency developed a lender match tool. So it's kind of like, you know, the swipe right, swipe left, you know, apps that are out there. But on SBA's website, there's this lender match tool. And what it does is it allows you to have an entry point, right? So I think that's one of the biggest things for folks when they're trying to find financing, that if they don't already have an established relationship, they don't necessarily know where to start. So the agency has this tool, and you click on the button that says find lenders. You basically go in, you describe what you're looking to do, what your business is. There's a whole host of lenders that are on that list, and all of the participating lenders today are on this list, and it matches you up with the lenders to have to start that conversation. To, that's the key, right? The entry point to talk to the lenders and potentially apply for a loan. And again, it doesn't necessarily have to be an SBA loan, but all of the folks that are on the lender match have access to accessing the SBA loan programs as a tool to help provide financing. So I'll put a link to that, to the specific point on the SBA website where you find it. It's pretty obvious when you go on www.sba.gov, but I'll put a link in the chat if folks want to explore that, if they don't currently have a lender and you're trying to figure out what's my entry point. My contact information is also on the contact information sheet. You can always come to me. I know all of the lenders throughout the state, so you can certainly feel free to reach out to me if you want to just have a preliminary discussion, because it's a big part of what my job is at SBA, is to make sure that the lending institutions understand how to utilize the programs. So I'm regularly talking to most of them. And I will yield back my time, the rest of my time.
Thank you, Kevin. And thank you, everyone, for your strong introductions there. I think if we were to call it a day, we would all walk away with some information already. But we have more time. So for the next 45 minutes, we are going to go into some prepared questions. And I will ask them in general to the panel, and hopefully you can unmute yourselves as you see fit. If no one unmutes themselves, I'll start calling on you. For our audience, if questions arise, feel free to put them in the chat. We hope that we will get to them before the end of the session, but we have reserved the last 15 minutes of this session for your questions from the chat, as well as for you to unmute yourself and ask directly. And Kevin will be monitoring the chat, so we can pause throughout for anything that pops up there. So we're going to get started at the beginning. A basic question. I am a small business owner and I have never applied for a loan. Where do I start? What is the application process like, and what documents are required? And it looks
Rachel,
like Bobby.
Sure, I'll take this one. So for BDCC, we've taken a little bit of maybe a different approach to this, and really set it up so it's a stepped process for folks. So when a business comes to us, they complete an intake form, very high level, business name, information, what type of information you're looking for, technical assistance, financing, what have you. That's an intake form. That then helps us direct you to where the right person that you need to talk to. If you are approaching us for a loan or some type of capital, then we have a very easy letter of intent, so we can learn more about your business. What are you looking to achieve? How can we help? How much money are you looking for? Very, again, high level questions. From that, it then allows us to move you into the application phase if you're ready for that. Many of the borrowers that come to us get through the intake and the LOI process, and they may need a little bit of sort of technical assistance before they move on to that application phase. And we would work one-on-one with those individual business owners, getting them ready. Maybe their financials aren't quite where they need to be to apply, or they, they haven't registered with the state, or it could be all sorts of different reasons. We will help that business to do all of those, get over those hurdles, if you will. Then once they're ready to apply for a loan, again, our loan application is online, so it can be done. It's very user-friendly. It's fill in the blank. We try to get away from the paper approach. So we do it electronically, then it can go into either the SBA or the USDA file, because we need to keep hard copy files for that. What do you need to bring to the table in order to do that? You need to fill out the application. And the way that we've structured it is, it depends on how much money you're looking for. So if you're looking for a loan that's $750 up to $2,500, it's a much simpler application. $2,500 to $5,000 is a little more aggressive. And then $5,001 up to $50,000 is even more aggressive as far as an application is concerned, so on and so forth. We will ask, the first thing we're going to ask for, in addition to the application, is financial statements. We would be looking for current financial statements, forecasted, and potentially historical if you aren't a startup. And then you would bring that to the table and we would walk through. We have a very easy checklist. You can go down through and say, I have this, this, and this. I'm missing the following items. So it's really the application, a conversation with us, and then bringing your financial statements. Those are the top 3 items that you're going to need to apply for a loan with us.
Bobby, thank you. That was very thorough. And I acknowledge that each organization might be a little different. I'd invite our panelists to share anything that might be different about your process. And if not, we can move to the next question. Laz?
Yep, I'll chime in for just a moment. Yes, thorough process. Certainly ours is thorough. One of the differences is that the intake form, I like to describe myself as the intake form, meaning that when usually the inquiries come in, those basic questions are taking place. What exactly are you looking to start? Most of the folks that do call us have an idea, have worked through a business plan, or have some idea of what they're looking for, and they're very specific. And I need a piece of equipment. I'm purchasing an 18-wheeler. I'm in a food business and I'm looking to purchase the building that I'm in. Most of them have a direct focus. It's certainly what I like to do is just framework it and just decide, what are we looking at here? Are we looking at a micro lending opportunity? Are we looking at a real estate transaction? Are we going to need some type of participation or support or help from others in the community, such as Vita? What type of guarantee may be in place with SBA? So those are questions that usually come out right from the beginning. As far as our application process, it's application, personal financial statement. If it's a pro forma or a startup, we're looking for projections, 3 years of projections. We'd like to know your understanding. So business plan, of course, and we'll go through some of those basics as we gather that information and then begin what I call the first step phase. There's usually a 3-step phase within our process. First step is to review and discuss the project with someone like myself. And if I feel, and we both feel as an entrepreneur, you feel there's a conviction to get this going, I will present it to committee. I will go to our board and I'll say, hey, this is what we're looking at, is provided that we have all of the pieces. Our process can take sometimes a week, sometimes a month, sometimes up to 6 months. It depends on what we're looking at. So that's just a quick general overview, but I will, the intake form, I will describe myself as the intake at this time. So thank you.
I like that. Very easy. Go to Laz and you're the intake. Alex, Dan, or Sandy, anyone have anything to add?
Yeah, I guess I would defer to you for your judgment.
We can move on from my perspective.
What was that, Dan? Oh,
Yeah, Rachel, this is Kevin. There's a really good question in the chat that might be appropriate just to toss in right now. And the question is there a loan program that is asset-based, 50 to 80,000 assets valued at about $1 million, no mortgages? So does somebody want to kind of respond to that? I know you all could play in that realm, I believe.
I can just, I just say real quickly, I would need a little more information. You know, we would consider the assets as a piece of the overall lending, you know, what we were thinking to do, but I would also need to know, you know, do you have a business plan? Like, so we would want to analyze the other pieces of it, but you know, we typically look at your credit, your collateral, and your plan, and we can weight those 3 items in different ways. So it's not, I'm not sure if you're asking, will you lend only on assets with no business plan and no credit check, really, or are you looking at, I have those other things, but my assets are my main asset, I guess I would say. And so I think that all of us do lend on assets, but we also consider other factors as well.
Yeah, and one kind of other item on that, generally, unless I'm mistaken, but generally what you're lending to the business is what you will take as collateral.
Correct, Kevin. We would certainly start there, but we might need above and beyond that, depending on the specifics of what they're buying and what they're looking for money.
Yep.
Yep.
And also I may add on the asset value. It's important to understand what that asset value is. Many times I'll have someone give me a call, especially when you're purchasing an existing business, and they're saying, well, I'm purchasing a business and the equipment's worth $100,000. Well, how did you determine that? Well, the owner says it's worth $100,000. Well, there may be a shortfall in that. And that's part of what seeking an SBA guarantee or some type of support for those shortfalls exists. So understanding our collateral value is important, and how we advance to that value is just as important.
So the key that I heard there was it's something that you need to have a conversation with a lender to kind of really flush out, right, what it is that you're looking to finance and what product might be the best fit.
Absolutely. Correct. Yes.
I think a lot of the mission-based lenders on this call, you know, they are not trying to hit a sales goal at the end of the month and get the loans through no matter what. I think all of us want, the last thing that any of us want to do is loan someone funds that is not the right fit for them. So you see with asset-based lending, you have operators like Cabbage and other kind of more predatory lenders that will lend on assets, but be careful with that. You know, you really want, I think if you work with any of the lenders on this call, they're going to do an objective evaluation of whether or not you should make the loan. And, you know, they may not approve it, but again, we do not want to loan people money who can't pay it back or whose business plan doesn't look workable, because we're not helping you in the end by doing that.
Yeah, that's a good point, Alex. I've seen a number of businesses that have really struggled or even gone under because they've gotten into some of those predatory asset-based lending loans.
And I think all of us would, all of the lenders on this panel as well, if you are in trouble with an asset-based loan, we are interested in helping you if you are in Vermont as well. So we may be one of the people that can help you get out of a Cabbage loan or a Square loan that's gotten a little out of hand.
Thank you, Daryl, for the question. And thank you all for your responses and your cautionary words. I think it's really important conversation. We're going to move to the next question, which is in regards to personal credit and how it relates to the loan process. So I'm curious, what is the first thing I should do before applying for a business loan as it relates to my personal credit?
You may want to obtain a pull credit report if you haven't done so. It's a good idea to know what your personal credit may look like, to at least engage in a conversation that you may say, I'm aware I may have challenges or have had past challenges, and brings more forthright of an understanding, and it helps during the dialogue. As far as if we have someone who has credit challenges, but they're looking to get a business loan, how do they go from one step to the other? Just quickly to add to the credit unions, what we do, we would certainly counsel and work with that individual to move them. And the bridge is one of the great features we have at the credit union, is that if someone has a credit challenge and it's, let's say it's something of medical nature, let's say, and it's in the past, well, it's something that's in the past, we can bridge and let's work together and move ahead. And perhaps maybe there's a micro lending program that we can attach that individual to. Most of the credit scoring, I'll just go out as far as we are concerned, is 620 and above. I'm just going to throw that score out. That's a score I usually look for on most of my projects, 620 or above.
Well, I'll
Dan, I
follow up.
saw, yep, go ahead.
Yeah. I'll follow up on it. So VCLF does not have a specific credit score requirement. Certainly, we will, we pull a credit report on everyone once they apply, and we'll review that credit report with them to go over what's in it. There are a number of things in there that can be negative events that we can talk about, such as medical collection debt. That's not necessarily indicative of your ability to successfully run a business, in my view at least. And so we can try to find a way around things like that. I will say one of the reasons we don't like to use a credit score requirement is there are a number of groups that seem to be disproportionately harmed by credit score. And based on our historical review, one is veterans, because they're often spending a lot of time abroad. They won't have as much credit history, and we found they disproportionately, veterans have lower credit scores, at least in what we've seen from our end. And so that would be a concern to us if we were excluding them, obviously. And the other group where we see that doesn't have a lot of credit history is new Americans. And so oftentimes, someone can have a great business idea and have a strong business plan, but they just simply won't have the credit history. So we want to find a way to work with those folks.
All right, thank you. And I will put in a plug that at CVOEO, our microbusiness coaches and counselors are prepared to meet with small business owners to discuss credit. And if credit is an issue for you, they can work with you in terms of identifying ways to improve your credit, or if you do not have any credit, how to start it. So a plug for our program there. Our next question is actually something Laz brought up in his introduction. So Laz, you might be the one to start us off, and then we can go to some others. But I'm curious if the 5 C's of credit are still relevant in the current lending environment. And as a reminder, for those that might not be familiar, the 5 C's are character, capacity, capital, collateral, and condition.
Yes, they are still applicable today. I've been in banking for about 2 decades, and many of the folks that I've worked with and trained me over time have made it a point to always keep those in mind. So any of the audience that I speak to, the idea is, where are they coming from with the 5 C's of credit? Meaning, what exactly is their project? What's their request? Do they have collateral? What's the cash flow look like? Their character. I bring up character because I remember I was working on a loan about 8 months ago that I had what you call a walk on water, a deal, and I had presented it, and it turned out the individual that was looking to borrow the money about 2 decades ago had done a bunch of bankruptcies and had defaults of all sorts of nature, and that character reference had gone away a couple of decades later, but I happened to be with the lender who I presented it to, and they said, "Oh, this is a great loan. It has every bit of those 5 C's, but the character piece, historically, this individual defaulted and did not provide any remedy." So that's a character piece. It's not so much credit, but who are you? What do you represent? Are you with a group? Are you sole proprietor? How do you represent in your community? Are you investing in your community? Are you creating jobs? What exactly are you bringing to the table? Their capacity, your personal credit, how does that look? What do you bring to your table? Are you an individual that manages your credit and your bills on a timely basis, timely payments? That does reflect as well on character, and actually may a little bit on the capacity side. This person has a little bit of room that they can service their debt a little bit more. They can just move that range. So when I look at all of these 5 C's, and I encourage everyone on the call who's not familiar with it, just look it up, Google it, and take a look at it. Say, how do I fit when I present my project? And do I have the appropriate collateral? Am I cash flowing appropriately? What am I representing in my project? And what's the capacity? Do I have the funds appropriated for this project, or do I need to bring an investor? So a whole lot said with the 5 C's is something that I think about regularly when I meet with entrepreneurs and their enthusiasm and their character and their capacity and their collateral and their cash flow, and you've got all the right remedies to make a project work. So I'm going to stop there, because why dig any heavily if you'd like me to on each of these? It just does cover. Think about when you're going to purchase a home, or you're going to purchase a vehicle, or you're going to purchase a business. Whoever you're going to that entity, they would like to know, does this individual have the ability to pay? How have they managed their personal timely payments? Are they an individual with good character? And again, all of these things are looked at. If you have a bankruptcy, if you have issues, if there's unfortunately incarceration, I have had all sorts of requests. We are always looking to work and help everyone. Again, what do you bring to the table? What was yesterday and what was today? So those are the 5 C's to me.
Just one quick tip on something else about credit is that if you have an existing business, it's important to check your UCC liens before you go through the loan process. So there's a whole system run by the Secretary of State where if a borrower lends you money, they put something called a UCC lien on your business. And I can't tell you how and sometimes getting rid of those old liens can take a significant amount of time. So if you have an existing business and taken money in loans for equipment or other things over the past, or maybe you've had a dispute with a client or a customer or supplier, before you go through the loan process, I would just advise you to take a quick check at your Secretary of State and really understand where any UCC liens that are listed on your business are coming from, because the last thing you want to do is get a week into the process and find a UCC lien with some number in Mississippi that takes you a month to track down and figure out who it's from. So I'm constantly surprised in how many, and also look under alternative spellings for your business. Like there's lots of mistakes in that system often, but it's something that isn't talked about enough. But business owners should really keep an eye on their Secretary of State accounts and the liens that are in them and make sure that they're correct. And you can get help doing that from any of the people here, from their technical assistance providers as well. So if you just reach out, if you want to learn how to do that.
Wonderful. Thank you both. And Sandy, I see you've unmuted yourself. Is there anything you'd like to add?
Yeah, I would say I'm going to go back to the overall 5C question. It's the heart of commercial lending. It's the heart of what we all do, as well as the banks. What differentiates each lender, both on this panel as well as any around the state, is how we look at those 5 C's. Some institutions are going to look at them from a very conservative standpoint, and others are going to look at them from a less conservative standpoint. And that's the heart of what makes the credit culture of a specific lender and how they do their business. But at the heart of it, those 5 C's are what every commercial lender is going to be looking at.
Thank you. Thank you all. We received a question in the chat, or I received a question, I don't know if you're all seeing it, about collateral, and I'd love to pose that to you. One of the major limitations I anticipate in seeking funding is a lack of substantial collateral. I have excellent credit and a small amount of personal capital to invest, but collateral seems like a very necessary requirement. So I'm curious if you have any thoughts on how a lack of collateral can be offset by other factors.
I can take a stab at that one. So speaking for Vermont Community Loan Fund, we can actually lend completely unsecured up to 10,000. So if it's a small micro loan, we can certainly look at that. And up to about 25,000, I can be more flexible on collateral. I don't have to be strict. I have more liberal policy requirements there. And so in terms of things that can help overcome a lack of collateral, I'm much more interested in understanding the potential of the business, the cash flow, the revenue the business can generate, and potentially the mission impact of the business. Will this support a lot of Vermont jobs? Will this be a key part of supporting like the local landscape, either through agriculture, local food, something like that? Will this help support a downtown area that's struggling in this business? So those are all things, but that can help overcome that. But most important would be a strong plan to generate revenue.
Thanks, Dan. Let's see, I'm looking for any other unmutes, but I will pose the next question. And Bobby, we haven't heard from you in a while, so if you don't mind me putting you on the spot, I'm going to ask this to you. I am ready to schedule a meeting with a lender. What should I bring to the meeting and what questions should I ask? How should I prepare for my first meeting with a lender?
Sure. So when you come to meet with us at BDCC, we're going to ask you general questions about your business, or if you have a startup idea. So certainly a business plan. It can be as robust as you want it to be, or it can be, a couple of paragraphs that we can then start to work with you on. So certainly a business plan, business idea. We will, if you are a current business, we would be looking for financial statements. And keying off from one of the items that Dan just talked about, our mission is job creation and expansion in our region. So we want to understand what your future goals are. Are you going to be successful? Are you willing to participate with BDCC on both pre and post loan closing technical assistance? So a number of people have talked about, what are we looking for in a borrower? And for us, going back to the 5 C's, we really look at character. And part of the requirement is that you will work with us before you take out a loan and after you take out a loan. We are investing in you, and we want it to work both ways. So, I would say if you can come to us with just your business plan, financials, and a thorough understanding of what you want to do and how you want to succeed, that would be the starting point.
Thank you, Bobby. Anyone else wish to chime in at this point? Okay. Well, I think you're all going to want to participate in this next question. So I'll pose it and we can go around the room. What types of loans are available for small business borrowers and startups, and where can I go for help and direction? Bobby, I see you first.
I'll take this. Yeah, so we have, as I said in my opening, we are a newly approved SBA microloan lender. So we have that product that's available in, we're approved for Windham and Bennington counties, and potentially Windsor and Rutland counties as well. We also have a USDA Rural Micro Entrepreneur Loan Program. That's for a business or a startup that has 10 full-time equivalents or less. So there's a little bit more sort of guardrails versus the SBA program. And then, of course, we have the newly approved crowdfunding opportunity. So those are the 3 loan products that would be available in our region for startups or micro borrowers.
Sandy?
We tend to custom design the loan to what the needs are of the borrower, what they're buying, what they're using the funds for. We have a number of loan programs that allow us to do that, so that we're able to do small loans up to big loans. At the ultimately, the whatever's being purchased or how the funds are going to be used will help dictate how long the loan will be for. And as well as things like cash flow and what collateral is available to do that. So it's not so much at Vita a specific program that will fit your loan into this specific program, as much as we'll take a look at where you are in your business cycle, what it is you're trying to do, and then custom tailor it to that.
Great. And Sandy, are you statewide or do you cover a certain region?
We are the entire state.
Okay, thank you. Morgan, I see your question. I'm going to get through the rest of the panelists if they have anything else to add, and then we'll come to you, okay? So Dan, if you have anything you'd like to promote, plug.
I mean, I felt like I already hit that in my opening spiel. I mean, all our
You did.
programs are on our website and people can check them out. I would say, echo that. I'm much more interested in looking at good business ideas with good mission impact, and we'll figure out which program to put you in, you know, from there that best suits your needs.
Thank you. And Alex and Laz, the same. I know you've already touched on this, but an opportunity. Alex, you've unmuted yourself.
Yeah, I'll just say that, you know, one of the main reasons that all the alternative lenders exist is to fund startups. So that's the bread and butter for almost all of us. So we will probably be more easily able to fund your startup than a traditional bank. So we're probably, and also have a lot of access to a lot of other resources. So starting with us or one of the others or CVOEO is a great choice for a first step.
Thank you. And Laz, anything to add? Or if not, we'll go to Morgan. Okay, thank you. Oh, yeah.
No, just to quickly, just to say, I would like to describe us as a bridge between the creative side and the conventional side, where we would focus on conservative when it needs to be and creative when it needs to be, based on what the project is and what the individual or group is looking for. So it's not a specific fit. It's, let me hear your project, what's your request, and let's see how we can put this together.
Perfect. Thank you all. Morgan, thanks for your patience. Feel free to unmute yourself and ask your question.
Everyone, thank you so much for the space today and for being here. My name is Morgan Nichols, and I'm the New England Regional Manager of Main Street Alliance. We're a small business organizing and advocacy organization, and so I do a lot of talking with businesses from throughout the state, and we're also a part of the Community Navigator pilot program. One of the things that I continue to hear from our smallest businesses, especially our women and our BIPOC-owned solopreneur, single person shops, there's kind of a number of things that intersect here. Lack of time, right, to drill through all of these resources, because we know that there is not a lack of amazing people doing amazing work throughout the state, but how to connect with the right resource. So that's number one. Number two, often there's a lot of fear about taking out loans because of student debt, because of just not wanting to be underwater in any way or beholden. So, wanting to look more into grants. And then the other thing that I'm hearing often, and then I'm also connecting people with some of these resources, and they just fall through the cracks. They are, they don't have employees. Their partner is making enough money so they don't reach a threshold to be able to be eligible for a grant. And I just wonder if anyone has any thoughts about how do we thread the needle for some of these businesses. I think that's something that I'd be really interested in having a broader conversation about, and I know our businesses would, but I just wanted to lift that up. That's what I'm hearing. And what's the best first thing that as a person who's trying to connect these businesses with these resources, who's the first person I should be contacting? Because even for me, as I'm like trying to navigate all these resources, it's overwhelming, right? To try to figure out what's the best and most targeted approach. Thank you. And thank you for all that you do.
Great questions, Morgan. Thank you. I'm not sure who would like to take on that question. Kevin, it looks like you might have some
Yeah,
thoughts.
I mean, Morgan, it would be great for you to connect with our office, the Small Business Administration office, because while we are not necessarily, directly involved in the lending, we definitely have experience and expertise in directing folks to the appropriate lenders. So, we kind of are a great actual entry point for some of that conversation. I think the one thing to keep in mind is, for anybody starting a business, generally there are not grants out there available for that. So, and, to kind of the point of folks kind of being a little leery on borrowing and, taking out, a loan, how invested truly are they in their business if they're not willing to, kind of sign on the line for a loan? That's, a question that I kind of come back to a lot. We do have a lot of conversations with folks, specifically seeking a grant. And generally, again, there aren't grants for that. And that's what, the loan programs are for. There's backing of, SBA behind some of these programs. So, I would welcome a conversation with our office to kind of talk through, and maybe there's some things that we can coordinate and help, the clients that you're meeting with.
Great. Thank you. I appreciate it.
I would also add that I think it's important at an early stage for those types of companies to put together their business plan and their projections and really hone in on how much capital they need for whatever it is they're doing. Are we talking working capital? Are we talking real estate or equipment? And really figure out those numbers. And to the extent that they don't have that amount of cash in the bank, it's important early on to line up how they're going to fund the entirety of it, I think, before they even really move forward with it. Because the hardest thing from a lender standpoint is to try to pick up the pieces in the middle of a project that was underfunded. Because at that point, the company is already struggling. So I think those are important first steps.
I'll just say real quick, I think there are compelling reasons why, I think there's been some bad actors in the financial space historically that have exploited people. And all I can say is, here at VCLF, we're trying to size loans and structure loans in a way to put people in a position to succeed. And we recognize it's a constant challenge to build trust. And that's one we welcome and one we're always working towards.
Yeah, and I think I would just build off from what Dan says. When we at BDCC decided to kind of move into the lending realm, we wanted to have different types of products so that if you do have a business owner that comes to us that maybe isn't quite really ready to take on a large amount of debt, we can start small. We have a product that's $750. We can do a small project. They can pay that back. They can start building their credit and they can get comfortable with that. So kind of taking it in smaller bites so that they don't have to come to us and say, I want a $50,000 loan that they may very well get denied for. So, breaking it up into project size.
I'm so sorry that I have to jump. I have to get over to a staff meeting, but thank you all for all that you do. And I look forward to seeing the recording. Thank you.
Well, thank you for your question, Morgan, and thank you all for your responses. We just have a few more minutes of this prepared portion, and then we will open the floor to your questions. So feel free to start putting them in the chat if questions are coming to mind. Otherwise, we'll allow for your voices to be heard in just a little bit. For the next question, I know some of you have already touched on this, but I'd love to hear what kind of ongoing support you offer after granting loans. Specifically in terms of if someone runs into a challenge, what kind of support do you offer?
So the SBA microloan program really lends itself for support for borrowers after they make their loans. As an SBA microlender, we get funds from the SBA every year in order to provide that support after the loan is made. So just so you know, like if you get an SBA microloan, there is money that's supposed to be available to help you after that loan is made. So that's part of the, the program is really designed for beginning businesses. So just an example of some of the things that we do, and I imagine everyone else would do similar things, are that we have a certified QuickBooks trainer on staff. We find the #1 need of most small businesses is that they need QuickBooks training or a laptop. We also have funds available to buy some small items for a small business. If you need a point of sale system, if you need a laptop to run your business. We also have grant funds available to hire a lawyer if you need help working out a lease agreement or something like that. So the loan kind of comes, you kind of talked about the grants, and it's kind of a funny thing. The grants aren't available, but there are grants funded available once you get the loan. And so I see the question in the chat, the USDA, all the people on this chat, on this call who have talked about the USDA RMAP program, which most of us have the exact same version of the SBA microloan run by the USDA. So I would bet most of the lenders on this call are USDA lenders. But just to follow up again, we pretty much provide whatever. We do an intake, we do a consultation, and we provide whatever technical support is needed in order to help that business move to the next level.
Yeah, we're a USDA lender as well, but I will say that definitely the SBA microloan program in particular was very invaluable during the pandemic in terms of letting us offer the business advisory support after a loan was closed, and just the support during COVID was very valuable from the SBA.
We too are a USDA lender, and as I stated previously, we really expect anybody that comes to us looking for capital, that they're making a commitment with us, that we are going to be checking in with them regularly, seeing how things are going, offering assistance into the future, and hopefully at some point connecting them with a traditional lender, right? We want them to be able to move on and to establish that relationship. So we're in it for the long haul.
One more thing, in order to even become an SBA microlender, to get that authorization, you have to have a long history of helping businesses with technical support. So all of the SBA microlenders on this call they were technical assistance providers first before they became lenders. And they were awarded that lending intermediary contract because of the technical assistance that they'd done in the past.
Thank you all for your answers there. Let's see. I'm going to we'll do this question. Because you've been talking about some of the support that SBA provided during COVID. I'd be curious to hear if there are any changes you've made in lending as a result of COVID and this pandemic era.
I would say VCLF, we've made maybe a change in philosophy a bit and been much more interested in businesses that have diverse streams of revenue. For example, we had worked with some like food providers who are only selling to wholesalers who sold to restaurants, and obviously that didn't end up working out too well in the long run, and so they had to kind of shift and pivot to multiple other providers. So I've become much more interested in evaluating, businesses that are trying to do something more resilient or trying to pivot or trying to diversify their revenue streams.
I think I'd say, the initial conversations have always been meaningful, but they're probably even more meaningful because most, if not all, companies are coming off of 2 years of, we'll say, not their best performance in many cases because of COVID. So then it becomes much more about the story, the conversation, and what steps they're taking to turn things around, so that those initial conversations have become even more meaningful.
I got to follow up on what Sandy said real quick. That's a great point. Like, we've recently approved a loan for a business that was denied by their bank because they showed a loss during COVID, and it was basically like a $7,500 loss. But we recognize what their future potential is, and we're willing to give them a loan. So there's definitely opportunities there.
Thank you. Laz, Bobby, anyone else? Alex? All right.
In our world, I would say nothing has changed. The 5 C's, coming back to what Sandy said, how each of us apply the 5 C's is a very good point. But nothing has changed in terms of our world. Yes, if you're an existing business that's been through the pandemic, please, we are very interested in understanding what you did, how you did it, and what exactly is their gaps, what are the challenges, what are the changes you made. A lot of the businesses I saw had gone, for example, on the eatery side, would close down shop, but then went heavily on delivery and expanded on that and did well. And some went online and did more e-commerce. So there was a shift. So there are success stories that are certainly coming out of the pandemic, but certainly challenges as well, as we all know. So the idea is to just listen to what those challenges are and certainly applaud the individual or group saying, here you are on the phone, and what can we do to fund you to the next stage. So not much. During that time, yes, I remember going to committee many times, and there was a concern of how this individual, how this business was going to make it through. But resilient are many of the businesses, thankfully, in our concentration or in our portfolio have been. They've been resilient. So applaud them. But programs like the PPP and many other grants and SBA support made it helpful to get through that. So.
Okay. Well, thank you all. I do have quite a few more questions, but I promised that I would reserve some time for your questions from our participants in the audience. So at this point, I'd like to open it up to you. Feel free to raise your hand or unmute yourself to indicate that you'd like to ask a question. I'll also ask Kevin, have you received any questions in the chat?
Nope, I think we are all caught up to what was in the chat.
Okay. And feel free to, oh, yep, go ahead.
So I was going to say, while we're waiting for folks, one of the other additional pre-prepared questions that we do have on the list, kind of just to kick us off, I was wondering if one of the panelists could just give us an example of kind of the thinking outside the box that may have been done to help a business obtain credit. And it doesn't necessarily have to be, within the last 2 years. It just could be in general, like what things have you done? Because my hope is we're returning to normal, but again, that's my wishful thinking, fingers crossed. But what is something that you might have financed, and what was the outside the box kind of process to make that deal come together?
I'll take that one real quick. We've been much more willing to, at least at the starting first few months of a loan, give an interest-only period, particularly if it's an equipment install, ordering parts from abroad, or trying to complete renovations. That's all been very much delayed. So we're trying to be more flexible on the terms we're offering to people up front to allow them to be put in a better position to succeed.
Yeah, so we've certainly been sort of creative when it comes to interest only, accommodating, that kind of thing. The other piece that we find ourselves, or the situation we find ourselves in quite frequently, is participating in a capital stack that may include town revolving loan funds. So we also have been really working with, we have access to about 4 towns that have either set up or had established revolving loan funds, and they really act as a partner for us in a lot of these programs.
I think the term out of the box is kind of a challenge to answer, because what a bank might consider out of the box and what Vita does every day are probably the same thing. So I think that is that's kind of where we live and how we do business, is making projects happen, because we're often willing to go give higher loans versus the same collateral than, say, a bank would. Willing to understand more of a company's story than can happen sometimes in a traditional. So those are the ways that we look at doing things kind of out of the box from a traditional lender, but it's what we do every day. It's how we operate.
I'm speaking unmuted. I see we do have a question from Courtney. Courtney, please. Per Courtney, thank you.
Yep, I run Pear Smoked, a Vermont seafood smokehouse up in Walden, Vermont. I actually borrowed from Alex at Community Capital a few years ago, and we've grown about 300% since then. It's consistent. The problem I have right now, I'm in the process of purchasing my facility. I'm working with my Community National Bank, and actually they're connecting me with Vita to cover a portion of it. I've come up with my 10% down payment. In the meantime, with the price spike of product for me to produce, I've hit a financial bottleneck, and I need some really short-term way to borrow. I'm looking at around $10,000 to bridge through till the mortgage goes through. And it's really strange because business couldn't be better for me, but this is my bottleneck month of the year. And fish has been up about 24% in the last 5 weeks for me. So I'm trying to figure where to reach for a small line of credit, something in that realm. So that's basically my question. Things are going great, and COVID really didn't hurt us in the least. I've hit this bottleneck right now, and I'm just curious of any thoughts. Thanks.
I'm just gonna pair, we were thrilled to do business with you before. We have a track record with you. If you want to give me a call, I'd be happy to move forward with that and see what we can do. We do credit lines. Anyhow, I know everyone else can do this, I'm sure, but we do have all your past history, so we'd love to talk to you again. And you can give us a call and we can figure out what we can do.
Great. I starred you when I saw you on the panel, so I was going to do that, but I appreciate it.
Yeah, and I'm glad to hear the business is going so well. And I really miss the smoked fish dip that you used to bring us. So anyhow, I appreciate it. I'll reach out after the call. I don't want to step on anyone else's toes, but it's nice to see you again.
Thank you. Same here. I appreciate it.
Kevin, can I ask you to read the question? Oh, I'm sorry, that came through directly to me, so I will read this question. Let's see. I run a charity. We have received a land gift of 89 acres and bought 16 adjacent acres. We have power and water, but no structure except a large barn. Let's see. We would like to satisfy the owner's debt. Okay, there's owner's debt. Do we need to build a lodge or house before a lender can assist? We are a 501c3. Oh, seller's debt. And sorry if I butchered that question. Feel free to unmute yourself and ask it directly. It sounds like you're curious if a lodge or house needs to be built before settling debt.
There I am. I knew I was going to appear. Yes.
Okay.
So we received conservation land from Dr. Julie Larson, and next to it was 16 acres with a barn, and we are not allowed to build on the 89 acres. We're called the Mesha Wilderness Camp. So 3 years ago, we were nothing but a day camp, and now we've got 113 acre Ponderosa. So the 89 acres, we became a land trust in order to receive the land. We went through a struggle to find a land trust to assist us with the conservation restrictions. So we became a land trust. So now we have the 89 acres. We're going to use that for our wilderness camp. And we have a barn with power and water, but we don't really have a true structure. So the seller who sold us the 16 acres held paper on almost $200,000. So we've got a big asset. We've got owner we'd like to get rid of. Is it too early for a regular kind of lender to come in on something like this? Because we do have plans to build, but that's a process too. As we know now, we're learning all about Act 250, and we're walking slowly, and we're not going to be building this year. So I didn't know if there's any way we talk to anybody at this point, or is the asset not in a lendable fashion?
I would be interested in understanding more specifically, but lending on, taking out, is the question, is it, can you take out the seller's debt basically?
That would be lovely if we could remove him from the picture. We put down a substantial deposit. We held some money back because we want to have cash on hand. We're an 18-year-old charity in good standing with the IRS in the state of Vermont. Yeah.
Yeah, that could be something that would have to, get a greater understanding of where your, funds come from and the consistency of them. But that could be something. I don't know if that would be my department strictly. That might fall under community facilities lending, which I haven't talked about because it's been targeted to small business. But that's something maybe we could look at.
Excellent.
Generally speaking, it'll depend on what the terms of that seller financing are, how willing and able, generally speaking, lenders are to pay off seller financing once it's in place. I think you're going to need to be to the point where you have figured out what your project is, being that you're looking to build something and expand.
Mm-hmm.
So you need to have that project outlined in budgets in place, and it would make sense to kind of look at funding and that takeout of the seller all at one go.
That's a logical answer. Thank you.
And my son attended Mesha day camp.
Yeah, it's just amazing how we've come here now. We have this lovely facility, and we're going to have our second year on our own land. So it's delightful.
Yeah, he was at the firing range when he went.
Well, if anybody knows,
he enjoyed it.
11 to 18-year-olds, we have 10 more slots available. It's only 1 week in July. And for $150, there's no better bang for your buck for a 6-day day camp in Vermont. And there's fishing, hunting, archery. We are beginning the forestry and the conservation management, but that's going to take a few more years. But we've got a couple compostable gardens that we're setting up, and Bonnie Mesha is working on that. So it's going to be delightful. Once we get it up and running in a couple of years, we're going to have sleepover camp, and it's going to be good.
That's great.
And funded.
Well, thank you for your question, Dennis. And I wish I was a teenager to go to your camp. That sounds really fun.
Thank you very much.
We have time for one more question. it looks like, maybe two, if we can speak fast. So I invite any other questions. Okay, and if not, Kevin, I want to give you an opportunity to ask any final questions or any final comments from you before we wrap things up.
Yeah, I was just scanning the chat there to see if there was anything. I think the biggest thing, I'll just do some final comments. The biggest thing, there really is no bad time to reach out to start the conversation with a lender. Again, if you're looking for financing, I always recommend, just establish that connection with a lender. The way lenders work, they're constantly building out what's considered a pipeline. They may not be, you may not need the money today, but 6 months down the road, you may need that. Lenders have pipelines that go out that long, sometimes even longer, depending on the project. But it's really important to make that connection with the lender. Generally folks, in the lending community will give you the specific things that they're going to require. So it kind of gives you a direction to move in. And once you have that relationship established, they'll constantly, I know there's a good group of lenders that will constantly, check in with you every couple of months just to see like, okay, where's the project at? Where, what direction is it moving? Is it still something that you're looking at doing? So kind of prompting questions. So it's, to me, there's never any bad point in time to reach out and make that connection with a lender. So keep that in mind as you're looking to move forward. If it's a startup business, if you're an existing business, again, it's critical to have that kind of relationship. And then kind of one last plug, here for all of our lenders in Vermont, during COVID, the SBA offered a lot of programs out there for businesses. And I can honestly tell you, folks that had a local lender, a local contact, were a lot more successful in accessing those programs right out of the gate. And, folks that had that relationship established with a lender in Vermont got taken care of. Folks that didn't have relationships established sometimes struggled, and they went to some of those online lenders that we heard about. And, while they were able to get the funds, unwinding it hasn't always been an easy process for folks. So in Vermont, we have a great group of lenders who are willing to listen, who are willing to help you, so use what we have here in Vermont, for our lenders. That, we do not have bad lenders in Vermont, and I think you can kind of glean from our panelists, they are all very good at what they do. So there is no need to go to that online lender for assistance. It may be quick and it may be easy, but the terms on the loans are not advantageous to a business owner. The only thing that it offers is quick access to capital. But again, it's not on favorable terms for your business. So again, use the resources here. Use all of the lenders here in Vermont. I can't stress that enough, that having that relationship with a lender in Vermont is critical. And, if we do ever venture into, another pandemic, as a business owner, having somebody there on the lending side in Vermont that knows you and knows your business is a huge win for you as a business owner.
So thank you, Kevin. With that, I notice we are 2 minutes over. I would like to wrap this up, but I want to extend a huge thank you to Kevin and the SBA for organizing this morning and for inviting me to be moderator. Dan, Bobby, Alex, Sandy, and Laz, thank you for your participation and sharing just your honest answers and giving a real explanation of the landscape. It's been incredibly informative, and we're very grateful for your participation this morning. As a final plug, if you did not pre-register, my email address is in the chat. Please send me your contact information, and I can make sure you receive everyone's contact information that participated today, as well as links to their websites and a link to the CVOEO website as well. So with that, I'm going to stop recording and thank you all.